Okay, John Navin, really a pleasure to meet you. I'm very nice of you to take some time out to talk to our community today, John. Appreciate it.
Let's see. How do I start this?
Well, it started.
Oh,
So
good.
I'm not sure if you wanted to share your screen. Did you bring anything you wanted to show? I could share mine or
Well, there you
okay.
are. I see.
Oh,
Okay.
okay. Hi, John. All
How
right,
you doing?
I'll turn my camera on too, and we'll do one of these interviews. So, John, very nice to meet you.
Nice to meet you.
Appreciate you taking some time today. So, John contributes to Forbes. Why don't you tell us about your road to becoming a financial journalist and what you do now? And I actually I am going to share the screen a bit to because I want to just show some of the articles that John's written right here.
Oh my God.
Okay, so
I wrote all that, huh?
yeah, I mean you're following the whole gamut here, John. So you're covering crypto and everything, and just from your headlines, and I know you don't give investment advice, but I bet you're like me and you've seen a few cycles.
Yeah.
What's your vibe about what's going on here? We got the market liked the fact that we, didn't have a hot number today on the CPI. Have you ever seen an era of speculation like we have today? I mean, with
Sure.
things, yeah.
A couple of times, late 1999, leading
Okay.
into the end of the tech stock boom.
Okay.
Just to give you the background, Dale, that was the year 2000. I entered the online stock trading competition called Marketocracy.
Okay.
It's come and gone since then, but they gave you $1 million of virtual money, and you had to put together a portfolio based on standard mutual fund practices. For
Sounds like what the
example,
Fed does.
yeah, you had to diversify 20 different stocks at least. No single stock could be more than 25% of the portfolio. You could never be more than 35% in cash, and so on and so forth. At the end of the first year, I did well enough that they invited me to become a member of their Masters 100 fund. They called it the
Wow.
M100. That was real money, and they started paying me. And then by 2010, I placed in the top 10 out of 80,000 participants in Marketocracy. So the investments editor at Forbes gave me a call, said he was writing a book about the Masters 100 fund with Marketocracy. And could he interview me? I said, sure. So I ended up in this book, Dale. The book is called The Warren Buffett's Next Door, The World's Greatest Investors You've Never Heard of.
I've heard of the title.
Yeah, I'm not Warren
Yeah,
Buffett. I'm not one
I
of the
know.
world's great investors. The performance by 2011, 2012 had fallen off a bit. Matt asked me if I wanted to write a blog for Forbes because I had some news writing background, and I've been doing it since then.
Okay.
They let me write about anything I want to write about, but I stick mainly to stocks and stock markets.
Okay. So, I think that a lot of us at times reach a crossroads in our career because, John, I really do believe that trading is really a young man's game.
Yeah,
I've noticed that I don't handle the pressure the same way I do, so I don't put as much pressure on myself as far as leveraging up and so
sure.
forth. But I've never been to a retirement dinner for a trader. Have you?
No,
That's
never.
because so I'm wondering what was it that led you to? Because obviously you had skills. You won contests. You traded real money. You probably had some great years. Probably had some hits.
Right.
Just a part of it. What made you decide to give up trading, which people try and walk away from it and have a very difficult time doing so?
It is too stressful. I had a seizure once. That was enough.
Okay.
The doctor prescribed medications, what Keppra and gabapentin. I've been taking them for years, and so I don't trade anymore because it's highly stressful. I agree with you. It's great to be young and doing it, but
Yeah.
much past the age of 65, I'd rather take it easy and just write. But it's a fascinating world, isn't it?
Yeah,
Just to observe and write
it's a
about it.
jigsaw puzzle. It's
Yeah,
really it's an exercise. We don't have to worry about brain fatigue like a lot of people do brain exercises to keep themselves sharp. If you're just a market watcher and analyst of the market, that's a big enough puzzle to put together, isn't it?
yeah,
To keep you
yeah.
active. So what are you
It's
seeing here, guy? What are you seeing here, John? I mean, I saw a few of your articles, and I see, I'm the boy who cried wolf a few times this year. So I'm still seeing some pretty negative divergences.
right.
I know that the rubber band stretched further and longer than I thought it would. I thought we'd be peaking in June, and here we are, in September. Um, do you think that we could be setting up for something meaningful into, what is seasonally a weak period? Or are there too
Yes.
many people looking for it?
No, I think it's just us people who observe this closely realize the potential for some serious selling off. I don't think it's widely viewed that way among the
Yeah,
masses or among even people on Wall Street generally. Here's what concerns me right now, and I wrote about it in the last article. It's the looking at the number of stocks now trading above their 50-day moving average. Every week, it's lower and lower.
shrinks.
We've got the phenomena of money flowing into Apple,
Yeah,
Microsoft, and Facebook,
yeah,
and flowing out of almost everything else. So I keep a close eye on IWM, the Russell 2000. It has not been hitting new highs.
for
And
8 months now.
yeah,
Okay.
I did an Elio Wave seminar with Robert Prechter long ago in the early 90s. And I don't know how much predictive value it really has, but I learned it so well. One of the great benefits was you analyze price charts carefully every time.
Yeah.
And right now, looking at some of the E-Wave stuff, it's gone a long way. I don't know how long it can keep extending like this.
I'm like an amateur, it would be like I wouldn't call myself an astronomer if I looked through a telescope once, right? But I talk to a lot of people, and I know a lot of Elliotticians, and they say that the difficulty of predicting the top for this wave is that it's an ending third.
Right.
And that's really the most powerful part of a market advance. So trying to top pick all that power can be painful if you're early.
Right.
But that means there's a pretty big four coming to the downside if we're peaking here.
Yeah.
And what do you think? What kind of correction could we get here, John? If that's a
20
correct
to
count.
30%, I would
Okay.
say.
Okay.
I'm ready for it.
Okay.
You know what
All
else,
right.
Dale? You look for signs of excess, and I think we see it in the cryptocurrency markets. At least,
Okay.
I mean, I've never seen anything like it before.
Me either.
Just
What's an
to,
NFT, John? I don't even
I
know
was just
what I
about.
can't. I can't even define it. What's an NFT?
I don't know. Well, I
No
mean,
frickin' trouble. I'm not sure what it is.
it's something to speculate in if you have too much money.
Okay, that is really a sign.
Yeah.
How about this, John? You ever see the commercials about there be like a football game going on or a big business meeting, and all of a sudden someone out of place shows up in the commercial, and they're like, "Well, who are you?" And they go, "Well, I invest in the QQQ."
Yeah.
Have you seen that commercial?
Sure.
All
Yep.
right, so I mean, it's very fashionable to, I invest in the future, the QQQ. It's like a Barron's cover to me.
That's right. I think that's a sign of speculative excess. I think the nuttiness around the cryptocurrencies is another sign. It's the sort of thing you saw about tech stocks in
Yeah.
1999 going into 2000. It's a vibe, you know.
Yeah. Where do you think flight capital is going to go? The dollar?
Yeah, I
Or
guess that's what the charts say. I like it that people have lost interest in precious metals, basically.
yeah.
Uh, Even though on the monthly chart, it's still an uptrend. You don't hear anybody talking about it.
No, you don't.
I'm wondering where the money will go if the crypto starts selling off. Those people,
Yeah.
who knows? I don't know.
Yeah, they're most of them are anti-gold. It's a big debate you see all
Yeah,
over financial media. They'll get a gold bug and a crypto guy together and argue which is best. I talked about last week, neither of them were.
yeah.
Okay, we had down weeks in gold and Bitcoin. To me, it almost felt a little bit because there was no real news, and it's not because the dollar was real strong. Almost felt like a liquidity event to me.
Yeah, no. I see somebody commenting in the comment section that we're boomers, Dell, and
Oh
it happens
yes,
to be true that
yeah, we are.
we're shaped by our experience. So
Yeah,
naturally, I'm going to look at gold because that's what we looked at in the '80s. You know?
yeah. Anyway, yeah, you know what? I feel very fortunate to be a boomer and have lived through the greatest period of music and days of trading floors, and when you had camaraderie among traders and it was a big family instead of everyone sitting in their bedroom trying to do this. How about that?
Now, I have two sons. They're in their 30s. One's 33, the other's 30. And they start rolling their eyes and shaking their head when I start talking about this stuff. So I
Yeah.
try to avoid it. But I agree with you.
Well, I'm glad I could give you a little outlet. Guys like us, maybe we should have a support some type of support group. But maybe since you are more of a journalist than I am, can you explain what this phenomena is about the banks having so much cash that the Fed has to do all these reverse repos to mop it up? Do you know what's going on there, John, at all?
No, I don't understand it.
Yeah,
All I look at is price charts, and I'm stunned to see XLF
yeah.
and the banks in general, and even regional banks continue to trend upwards. Although, I mean, I understand it. I see low rates and the potential for negative rates on bonds, which is taking place, I guess, in Europe. But beyond looking at price charts, no, I don't understand it. I've
Okay.
never seen it before.
All right. Well, let's switch gears to rates and yields. And yields have been stuck. I was more aggressively thinking about over 2%. And, I think eventually we'll get there. And I do also think that the lows are probably in. But you're right. I actually talked to someone who said during World War II, we were actually at negative 13%
Is
real
that right?
rates. Yeah.
Wow.
Yeah. So I think we're negative 1 or 2. What's your take on bonds? I heard a quote from Bill Gross yesterday. They're talking about his lawsuit. He plays music. Him and his neighbor aren't getting along. I guess when you don't have $20 billion bond fund to manage, you have to find something to do. So anyway, he says that the bonds are the next investment is the investment garbage can.
Really?
Yeah, that's
Mm.
Bill Gross. So um, I think that the Fed took the bond markets away from us after COVID. Don't you?
I agree. I don't have a good feeling long term here.
Yeah.
I mean, eventually rates have to go up, don't they? Or am I? I mean, they at
I
some
don't know.
point.
We're boomers. We can't get used to a lot of new paradigms. I don't
Yeah.
know if they have to. I think that we're due to, but I thought we're due for having stock corrections before too. So,
Yeah.
what are you looking at for maybe your next piece in Forbes? What do maybe you'll be talking about market corrections, and you have a line in the sand for technically what would give you, maybe people start realizing that. I'm thinking they buy the first 10% down, right? Because that's just a garden variety correction.
Right.
Um,
And
and then,
here's the thing, Dale. So many people have been trained to buy the dip these days,
yeah,
not just in cryptocurrencies, but it's happening in stocks. I mean, those charts you were looking at of the S&P 500, as soon as it gets back to that uptrend line, the
yeah,
dip buyers come in.
right.
I think my experience is they have to be punished before they stop doing it, and
Takes time.
that's where we're headed.
Okay, John, I'm gonna follow you. I mean, you have this. Is this on a blog site or something where I could get your
Sure.
articles?
You go to, well, I'm chapter 10 in the book. The PDF is online,
Okay,
although I think Matt would appreciate it if you bought the book.
okay.
Or go to Forbes.com and search for John Navin, and you can find everything there too.
John, I don't know about you, but I'm glad I talked you into it.
Nice talking to you, Dale.
I really enjoyed it, and some pretty good insights and fun to boot. And I appreciate your time. That's our most important currency nowadays, isn't it, John?
Yeah,
Time.
definitely.
All right, so continue to enjoy and stay healthy and stress free. And I'd love to talk to you again. Let me know if you're up to it. I'll
Sure,
be
we
in
will, Dale.
touch.
Thanks so much. I enjoyed it.
All right, you could follow John Navin at John Navin on Twitter and read his stuff. And you're getting it through the eyes of experience. Here's what I say about experience, everyone. You can't learn it. It only comes with the passing of time and living through stuff. Okay. But you know what? You can learn from the experienced. So if you want to do that, join Blake and the team on the Morning Edge in 25 minutes. Adios, everyone. Good trading. Good luck. And we'll see everyone tomorrow. Adios. And thank you, John Navin, again. See you, Laura.